Back in 2013, the world was a very different place for Bitcoin. It existed on the fringes, a digital whisper in the vast landscape of global finance. It was traded primarily by a small, dedicated group of cryptographers, tech enthusiasts, and early adopters, a community bound by a shared belief in its potential. At the time, a single Bitcoin was worth a mere $13, a far cry from the valuations we see today. For most people, Bitcoin was an enigma, an abstract concept they couldn't quite grasp. The very idea of it serving as the backbone of a global financial system seemed not just improbable but utterly absurd, a notion relegated to the realm of science fiction. Traditional financial institutions viewed it with skepticism, unsure of its legitimacy and longevity. Now, let's fast forward to June 18, 2025. Bitcoin has not only survived but thrived, emerging as a major world asset, a force to be reckoned with in the global economy. Its price and overall influence have reached levels that were simply unimaginable just a decade ago. It's a testament to how quickly things can change in the digital age. The journey from relative obscurity to its current status as a financial titan is a powerful testament to the potential of decentralized technology, the unwavering belief of its early supporters, and the transformative power of innovation. Just imagine going back to 2013 and telling someone that Bitcoin would eventually be held not only by major public companies, but even by sovereign nations as part of their national reserves. They likely wouldn't have believed you. The transformation we've witnessed is undoubtedly one of the most dramatic and compelling narratives in modern finance. A story deeply rooted in innovation, marked by incredible resilience in the face of adversity, and driven by the relentless pursuit of a new paradigm of financial freedom and control. This is far more than just a dry recitation of numbers and statistics. It's not simply a history of market capitalization and price fluctuations. Instead, it's a deeply human story, filled with tales of immense risk-taking, heartbreaking failures, and ultimately spectacular comebacks that defied all expectations. Therefore, understanding the intricate journey of Bitcoin is absolutely crucial for anyone navigating the complexities of our modern world, where it has undeniably become an undeniable and increasingly influential financial force. Ultimately, it serves as powerful proof that a single revolutionary idea, born from the minds of a few, can indeed challenge the long-established status quo and fundamentally reshape our understanding of money, value, and the very nature of financial systems. Back in 2013, the world of Bitcoin was a vastly different landscape than what we know today. The user base was tiny, mostly developers, deeply entrenched in the world of code and algorithms. These weren't just casual users, they were the builders, the architects of this nascent digital economy. Alongside them were the techies, the early adopters who saw the potential of this revolutionary technology. They were the curious minds, eager to explore the uncharted territories of decentralized finance. And then there were the idealists, the visionaries inspired by Satoshi Nakamoto's groundbreaking white paper and the promise of a peer-to-peer electronic cash system. They believed in a future free from centralized control, a future powered by Bitcoin. However, participating in this revolution wasn't easy. Buying Bitcoin was a complicated process, often involving navigating obscure and often unreliable exchanges like the infamous Mt. Gox. For some, it even meant resorting to in-person cash deals, meeting strangers in coffee shops or back alleys to exchange physical currency for digital coins. Security was a major concern. The infrastructure was still in its infancy, and stories of lost or stolen coins were all too common, a constant reminder of the risks involved. To make matters worse, the mainstream media often painted Bitcoin in a negative light, associating it with the dark corners of the internet, most notably the Silk Road marketplace. Yet despite these challenges, the early Bitcoin community remained remarkably united. They were bound together by a shared belief in the power of decentralization, the inherent value of a fixed supply, a digital asset that couldn't be inflated or manipulated, and the potential for borderless value transfer, a way to send money anywhere in the world without intermediaries. In those early days, Bitcoin's market capitalization was minuscule compared to today's standards, barely reaching $1.5 billion at its peak, less than the valuation of a mid-sized company. Everyone involved understood that it was an experiment, a bold and risky endeavor with no guarantees of long-term survival or success. But behind the scenes, the code was constantly improving, becoming more robust and efficient. The network was steadily growing, with more and more nodes joining the ecosystem. And perhaps most importantly, the idea of Bitcoin as a sovereign store of value, a digital alternative to gold, was beginning to take root in the minds of investors and enthusiasts alike. The seeds of Bitcoin's future growth and widespread adoption were being sown by a small but dedicated group of passionate and risk-taking individuals. In this uncharted digital frontier, conviction and belief in the technology mattered far more than any short-term price fluctuations or market numbers. In February 2014, disaster struck, sending shockwaves throughout the nascent cryptocurrency world. The event would become a pivotal moment, a harsh lesson etched in the history of Bitcoin. Mt. Gox, once the undisputed king, handling over 70% of all Bitcoin trades globally, suddenly collapsed. The reason? A devastating hack that resulted in the loss of 850,000 Bitcoins. This wasn't just a security breach, it was an earthquake. Panic set in like a wildfire. Users watched in horror as their digital fortunes vanished into thin air. The price of Bitcoin, once soaring, crashed spectacularly, plummeting over 85% in a matter of days. The market was in freefall. Mainstream media, quick to pounce, declared Bitcoin dead, writing obituaries for the digital currency. Skeptics who had long predicted its demise felt utterly vindicated, proclaiming the end of the Bitcoin experiment. But amidst the chaos and despair, something remarkable happened. The Bitcoin protocol itself never faltered. It never failed. The underlying technology continued to function flawlessly. The network kept running, blocks kept coming, transactions kept processing. The real lesson, etched in the minds of every crypto enthusiast, became crystal clear. Not your keys, not your coins. If you don't control your private keys, you don't control your Bitcoin. This crisis spurred a wave of innovation and a renewed focus on better security practices across the entire ecosystem. Hardware wallets offering secure cold storage for digital assets gained prominence. And there was a renewed focus on self-custody, empowering individuals to take control of their own digital wealth. The recovery was slow and arduous, a long climb back from the depths of despair. But the ecosystem emerged stronger, more resilient, and more determined than ever before. The crypto winter that followed washed out the short-term speculators and get-rich-quick schemers, leaving behind a core of dedicated builders committed to the long-term vision of a decentralized future. Mt. Gox's fall, while devastating, ultimately became Bitcoin's first great test, proving that it was bigger than any single company, any single exchange, or any single point of failure. By surviving this existential threat, Bitcoin emerged stronger, its core ethos of decentralization and resilience reinforced in the crucible of crisis. The network's proven resilience became its greatest asset, a testament to its robust design and decentralized nature. Bitcoin's trial by fire forged a solid foundation for future growth and innovation in the world of cryptocurrency. In 2017, Bitcoin returned to the spotlight, starting under $1,000 and rocketing to nearly $20,000 by year's end. Media frenzy and retail mania fueled the surge suddenly. Everyone was talking about Bitcoin. Exchanges like Coinbase added hundreds of thousands of users daily. Most newcomers didn't understand the tech, they were chasing astronomical gains. The bubble burst in 2018, with prices crashing over 80%. Yet the infrastructure, exchanges, wallets, media coverage, remained. Bitcoin became a household name, and the groundwork for future adoption was laid. The 2017 bull run was a chaotic marketing campaign, planting seeds for the next cycle. Bitcoin's mainstream debut ensured its story would continue. The world could no longer ignore cryptocurrency. The next wave would start from a much higher baseline. Bitcoin's place in the public consciousness was secured. By June 2025, Bitcoin is unrecognizable from its early days. Its market cap rivals the world's largest assets, and institutional capital has flooded in. Major banks and pension funds now hold Bitcoin, viewing it as a hedge against inflation. The launch of spot Bitcoin ETFs made investing easy and mainstream. Trillions in capital have legitimized Bitcoin, taming its volatility and maturing the market. Several nations have adopted or explored Bitcoin as legal tender or reserve asset. The Lightning Network enables fast, cheap payments, addressing old criticisms. Bitcoin's ecosystem now includes everything from derivatives to decentralized identity. It's a robust, multi-layered financial network, still true to its core principles. Bitcoin in 2025 is both a global asset and a tool for financial sovereignty. The scale of Bitcoin's growth is best shown by a simple story. Imagine investing $400 in Bitcoin in 2013, buying 4 coins at $100 each. That investment would have soared to nearly $80,000 in 2017 and even more by 2025. The patient holder, despite crashes and ridicule, would now have a life-changing sum. This isn't about trading genius, it's about conviction and holding a scarce asset. Bitcoin's fixed supply means as adoption grows, so does its purchasing power. The story reframes the question not what if it goes to zero, but what if it succeeds? Bitcoin is a savings technology, not just a speculative bet. The upside is asymmetric, the risk is limited, but the reward can be extraordinary. Early conviction in revolutionary technology can defy conventional wisdom. Early on, financial elites dismissed Bitcoin as a joke or a scam. Famous critics called it rat poison and a fraud. But the 2017 bull run forced the world to pay attention, and a new narrative emerged. Thought leaders reframed Bitcoin as digital gold, a store of value, not just a currency. The real turning point came in 2020 to 2021, as inflation fears grew and companies like MicroStrategy adopted Bitcoin as a treasury asset. Suddenly, holding Bitcoin became a mark of forward-thinking leadership. By 2025, even former critics now offer Bitcoin products and research. The conversation has shifted from dismissal to serious debate about portfolio allocation. Bitcoin's resilience and value proposition have won over much of the financial world. The war of ideas is largely won. Bitcoin is here to stay. Bitcoin has survived challenges that would have destroyed most projects. China's 2021 mining ban seemed like a death blow, but miners simply relocated and the network recovered stronger than ever. Each exchange collapse, Mt. Gox, Quadriga CX, FTX, shook confidence but left the protocol untouched. These crises reinforce the importance of decentralization and self-custody. Bitcoin's energy use has drawn criticism, but miners are increasingly turning to renewables and wasted energy. The debate is evolving. Bitcoin can help stabilize power grids and incentivize green energy. Every challenge has made the network more robust. Bitcoin's anti-fragility is its superpower. Attacks and failures have only hardened the ecosystem. The community adapts, innovates, and grows stronger. Bitcoin's survival is its greatest proof of value. Bitcoin's halving is its secret weapon. Every 4 years, the new supply is cut in half. This predictable scarcity is hard-coded, making Bitcoin truly finite. Each halving has triggered major bull markets as supply shocks meet rising demand. Over 95% of all Bitcoins have already been mined. New supply is now lower than gold's. No central authority can ever print more. The halving cycle is the heartbeat of Bitcoin, driving its long-term value. It transforms Bitcoin from a speculative asset into a savings technology. The rhythm of consolidation and expansion has guided its market for over a decade. As the last Bitcoin approaches, scarcity will only intensify. The halving is what sets Bitcoin apart in a world of unlimited fiat. In 2025, Bitcoin's transformation is breathtaking, but its story is far from over. It survived collapses, bans, and skepticism, proving its value as a sovereign store of value. The opportunity isn't gone. Bitcoin is still early in its global adoption. Its market cap is a fraction of gold or real estate, and more people are learning about it every day. Understanding Bitcoin is now part of financial literacy. It's about more than profit. It's about understanding money, central banking, and decentralization. The resources to learn are vast and accessible. Don't regret missed opportunities. Let Bitcoin's story inspire curiosity and engagement. The greatest innovations are often misunderstood before becoming indispensable. Stay curious, challenge assumptions, and engage with this technology. The next decade may be even more transformative. The revolution is just getting started. Be part of the journey.